Hi, this is Rhonda Scher, and I'm joined on this webinar with Bonnie Clark, my colleague, who is also an expert in living benefits, the new kind of life insurance. And we are so glad that you're here today. And what we're going to share with you are the benefits and how living benefit life insurance works, the new kind of life insurance. So first, let me welcome Bonnie Clark, the expert in living benefits and tax-free retirement, to this call. And let's just jump in and get started. Bonnie?
Thank you, Rhonda. It's a pleasure to be here with you, and it's a pleasure to work with someone who's got such a passion about helping other people protect what matters most.
Absolutely. And one of the things that most people ask themselves is, why do you buy life insurance? And we buy life insurance because we want to protect our families. We buy life insurance because we may want to pay off debts. We might want to pay for a loved one's education or be financially prepared for the unexpected. And the big question comes up because we know that only 2 to 3% of all term life insurance ever pays out. What happens if you are the victim of a critical, chronic, or terminal disease and you live? So what we're going to talk about today is actually a revolutionary new kind of life insurance that most people don't even know exists. Now, here's some really staggering statistics. Every 34 seconds, somebody in the United States has a heart attack. On average, a stroke occurs every 40 seconds, and there's a new cancer that is diagnosed every 30 seconds. Every 60 seconds in this country, somebody develops Alzheimer's, and there are over 500,000 people with Alzheimer's disease today. What we know is that living benefits are really the solution to safeguard your family's financial security. And that's the reason that I am so passionate about getting the message out that if you want to sleep better at night and know that there is something there in the event that the unexpected happens, living benefits is what will do it for you. And there is no cost to it.
Right. And there are 3 living benefits that we're talking about. This is what we call full living benefits. And they're riders that cover you and pay out in case you are the victim of a critical illness, chronic illness, or terminal illness. And these living benefits are automatically included in the policy, and one of the great things is it's at no additional premium. There are some carriers that have what they call living benefits, but they're not all 3. They're not full living benefits, and some things are added at additional cost. So what are these kind of riders? The critical illness covers things like heart attack, stroke, invasive cancer, Lou Gehrig's disease, leukemia, major organ transplant, and other diseases, because men have a 1 in 2 risk of developing cancer during their lifetime. Women have a 1 in 3 risk, yet nearly 2/3 of cancer-related costs are not medical. So this is what I would say to everyone on the call. If you or a family member got sick, and I mean really sick, how much money do you want to have access to? So think about
Bonnie,
that.
If I could add something.
Sure.
I'm sure that many of you are thinking, I had cancer 5 years ago or 10 years ago. Can I still get this? And here's the good news. The underwriting with these policies, and this is what we've seen, is that with certain companies, if you have been cancer-free for over 5 years, you are eligible in certain circumstances to actually get this coverage. So don't automatically exclude yourself if you think, well, I have had cancer in the past, or I've suffered a stroke in the past, or, you've had some sort of one of the types of things that are listed here, it is absolutely possible to be able to get this coverage even if in the past you have had one of these critical illnesses. Good news, Bonnie?
Yes, that's correct. And this benefit allows you to accelerate the payment of the portion of your life insurance face amount, the death benefit amount, before your death. So in other words, just to be really clear, if you have a policy and it has a $500,000 death benefit, you're able to accelerate a good portion of that policy while you're still alive to help you when you need it most.
And most of the time, those payments are tax-free, another really great benefit.
Absolutely. And this is a true story. It was a 48-year-old man named Juan. We used to call him Johnny. He got a new policy because it was actually cheaper than the what we call death insurance policy that he had before. So he wanted to enjoy the living benefits and lower his premium. Well, he was in great physical shape, got the highest risk class possible, but 5 months later he was diagnosed with stomach cancer that was nowhere in his knowledge 5 months earlier. And this is a claims check that was paid out. He had paid a few months' payments of $50-something a month, and he was issued a check for $344,000 tax-free. That helped his family when they needed it most. And imagine what that would be like and the stress that would be relieved from receiving a stress like that in a stressful situation. Another one of the benefits is chronic illness. It's when you can't do 2 of the 6 adult daily living or cognitive impairment like you were talking about, Rhonda, with Alzheimer's and dementia being more and more prevalent. And that can last a long time, but it's costly in needing additional help, again, to relieve the burden on family members. So this is, again, can be accelerated. Some of our carriers pay it in monthly payments, up to 50 months. Others, it's a lump sum payment. So again, really helps out a family when they need it most. And there's you can use it any way you want, live anywhere you want, have anybody be the caretaker that you want them to be. And then terminal illness. This is important because our carriers allow you to tap into a large portion of that face amount, the death benefit of the policy, if you're diagnosed with an expectancy of less than 24 months. Most policies that even have anything, you have to be diagnosed with less than 12 months to live. So this is allowing the person to have much more options and choices in their care and hopefully do things that will allow them to stay alive. So again, it's tapping in before death. And as you said, Rhonda, funds can be used for anything, so why don't you share about that?
Well, it's an interesting thing because, when somebody is given that horrible news that, you have 24 months to live, what do you really do? Well, here's the first part of the good news. You don't have to give the money back. So you might want to use that money to pay some of your medical expenses or possibly even seek alternative treatment. Maybe there's something that's outside the United States that, wouldn't be covered by your insurance. Maybe you have a bucket list of things that you want to do. Take trips, spend time with your family, go see the places that you've never seen. Pay off your home, maybe pay for college for your children. You can do whatever it is that you want. And if you're fortunate enough to beat the odds and actually survive, you do not have to give that money back. And again, what makes us different is the fact that with the companies that we work with, it's 24 months, not 12 months. And when it doesn't seem like a lot of time, but believe me, if that was ever a death sentence that was being told to you by a physician, you would want to hear 24, not 12.
That's right. And here's a true terminal illness story. Cora was a woman from Northern California. She had a real estate background, and she got a $500,000 life insurance policy with living benefits. 1 year later, she was diagnosed with terminal throat cancer, and what she did was she received this check for $380,000 tax-free. So talk about trading pennies for dollars. She really did that, and she was very blessed to get this check and to be able to spend her time with her daughters, purchasing a home for them, paying all cash. That was her choice and her joy to experience that with her daughters and to know that they were safe and secure and not dependent on anybody for their housing for the rest of their life. That's what she chose to do with her money. Sadly, she did pass away 1 month later.
And one of the things, too, that is important to really keep in mind is this is not just for young people, and it's not just for the people that are super healthy. It's really for everybody. And I think that when we think about our options and our choices in terms of in terms of protecting our family, everybody needs it. And even there's so many women right now that we know that are in their 50s and older that are divorced or widowed and alone. What would happen if an illness struck them and they could no longer be able to work? So even if you are somebody that doesn't have dependents, but you need some way to have that safety net in case you are one of the 1 out of 3 women or 1 out of 2 men that gets cancer or does suffer a stroke, a heart attack, or any one of the horrible things that can happen to us, this is a way that you can get term life insurance without it costing you any more. And that's pretty amazing because most people only know about death insurance.
That's right, and most people have no plan. It's very hard today for the average American to save enough money to pay for the costs that they would experience out of pocket, even with good health insurance, should they suffer a major illness. And, you know, that it's not just one income that's going to stop. It's both incomes. Because I don't know about you, but if my spouse was suffering one of the illness, I would want to be the one that would take him to the hospital. I would want to be the one that if he had to drive somewhere for treatments, I'd want to be there. So our whole family's income would be challenged at that time. So we want people not only to survive their illness, but not to be financially crippled for years to come.
Absolutely. And, you know, I just remember a story of a very good friend of mine who was in his early 50s and one day woke up and had a massive stroke and literally did not have this insurance. And if he didn't have a wife who was working who had health insurance, you know, you really wonder whether he would have lost his home. And basically didn't have anybody to help him. You know, those funds weren't there. They had to rely on family to come to help him so that his wife could work. And, you know, I'm sure if all of you think about people that you know that are close to you, that something has happened to them that they didn't plan on, it can financially devastate you. So there's 3 different types of living benefits. And, Bonnie, do you want to share a little bit about the 3 types?
Yes, I do. But first I'd like you to share about Stacy's story. Just tell us briefly about what Stacy was able to do.
Well, Stacy actually was a 39-year-old woman who had been diagnosed with, she had health insurance, but she also had the new kind of life insurance. And she had $100,000, and at 39 years old, she was diagnosed with breast cancer. And sadly, that's not as uncommon as we would really like it to be because she just, you know, and many times this happens with just a routine mammogram when they find something. And what Stacy chose to do was she took that $100,000 in her life insurance policy, and the insurance company actually made her an offer to accelerate the cash in that policy. So she took $80,402 instead of full life insurance payment at her death. And what she was able to do is quit a high-stress job, spend more time with her family. Her husband actually was able to make a career change, and she is alive and well today. So her husband was actually able to be there to take care of her when she was recovering. And to quote Stacy, she actually said, "I don't know if he could have afforded to do that without the living benefits life insurance policy." So it can really happen to anybody.
Right, and we're just glad that people can have those kind of options, and we feel it's really important for people to be able to have quality of life and maintain the lifestyle that they choose if this is available for them. So there's 3 forms of coverage: indexed universal life, term insurance, and also guaranteed universal life. One of them, term, of course, is the lowest cost initially, and it's like renting that insurance. It's made. You get to pick how many years you want that coverage in force, and you're usually covered at the max up to about age 85 or 86. Again, it does.
Funny, it goes up to what, 30 years if you're young enough. Is that right? 30 is
35. 35.
Yeah.
With one of our carriers, and the other ones are at 30. Yeah, so that's really important for people to know. So there's no barrier for anybody to get started. Then we have guaranteed universal life for those that want that coverage to last past 85 or 86, so that they can leave a legacy to their children and have something in place should they get sick after that. And that's guaranteed universal life, where it can be set to last till age 100 or 110 or 121 if you really want to. And it's also available to determine how long you want to pay that. So that's another option. And then there's indexed universal life, which we will do another seminar about that. That is a great way to save for a tax-free retirement. It's lifetime coverage through age 121. All of these policies have living benefits, and it's one of the few options we have where the IRS says the growth that occurs within the buildup, a way to save money and have access to cash value, that's done in a tax-free form, and then it's able to be accessed, if structured properly, as a tax-free distribution, which makes all the difference in the world, especially for people who believe taxes are going up in the future, which is the majority of people that we speak to. So I want to give you one last example here, just a specific comparison. And this is, we're using a 37-year-old male.
And this is actually a real person that we know who actually has a term life policy and is paying these type of amounts. So what we did was we just want to give you an apple-for-apple comparison so you can actually see what the old kind of life insurance, or death insurance as we call it, and the new kind cost. So do you have that slide, Bonnie?
Yes, I do. So that's right in front of us. And so this is for $500,000 for a preferred risk class. So that means he's in very good health, 37-year-old. And so we're going to look at 2 things, and they're highlighted there in that preferred segment, and that shows the term available. And you can see in his case he has options all the way up to 35 years. So 25 years, there was only one other company that would offer a 25-year. We're at $50.44 with full living benefits, and the other company is at $62.57 and only pays out if you die. This is actually the same company that Juan, that we showed you, that $344,000 check, he had that company's policy before and came to a living benefits policy, which, boy, was he glad that he did. It made all the difference in the world. And
so
then
again, just so you know what you're looking at a 37-year-old healthy male who had a $500,000 term life insurance policy with no living benefits.
That's right.
And here's the comparison with the living benefits. So for a 25-year policy, and this is just at preferred, he may even come in at preferred plus, $50.44. That's pretty amazing when you look at $62.57 with no living benefits.
Right, and if we look at a 30-year policy, we're sitting at $56.57 a month with full living benefits. Other companies are ranging from $79.19, and many companies that you might be familiar with that names are all above where we're sitting. There's one company, Anico, which is American National, which is lower than the premium that we're showing. But the reason that we love Anico, but we don't in the state of California, because in the state of California, they don't have full living benefits. The only living benefit available to someone in California is the terminal benefit, and it's much more likely people are going to suffer a chronic or a critical illness before they actually die, before they become terminal. So that is a great company, but just not in California. So that's a wonderful thing to see. So in the beginning, if you were thinking, well, this is all great stuff, but it's going to be a lot more expensive, you've seen now, by a comparison, that that's not actually true.
Absolutely.
And so, Rhonda, wrap it up here.
If you're thinking about, what would this cost for me and what, type of policy can I get? Well, one of the things that happens is you actually get a free little mini exam, and that's because the underwriting is a little bit more stringent. And so a paramed comes out to your home or your office at your convenience, and basically they'll take blood, urine, in some cases they'll do an EKG, and so you get a little free medical exam. And what's really nice about that is sometimes you actually get a very pleasant surprise and you find out you're a lot healthier than you thought you were, which was the case with me. This can go from, you may have thought you were standard to preferred. But it's very simple, and once we know that, then the next thing that happens is we just take a look and we find out what your budget is, we find out what type of policy you want, and you can very easily take that old term policy that you were quote-unquote renting and replace it with a living benefits term policy that might even turn out to be a little bit less than what you were paying. Bonnie, have I missed anything?
Well, just one thing. For those on our call that are opposed to needles and are willing to be considered at the standard risk, we do have a carrier in California with full living benefits that will go up to $250,000 face amount without a medical exam. So if they're opposed to giving blood, we do have an option for them as well.
So that's a really nice thing. So if you are interested and you would like to get a free quote, and again, oftentimes what we'll do is we'll actually get the information from you ahead of time, and then we'll just do a shared screen and be able to go through the scenarios and show you what is available at what cost. The best way to reach me is at 760-515-2822. Or you can always email me at Rhonda, RHONDAL, S like Sam, HER, at yahoo.com. Or you can always call Bonnie. And Bonnie, I'll let you give them your information.
And my cell phone is 619-787-4222. That's 619-787-4222. Or my email is Bonnie, BONNIE, at rocksolidwealthdesigns.com. That's ROCKSOLIDWEALTHDESIGNS.com. And thank you, Rhonda. It's been a pleasure to be with you and to present this information with you. I think that you'll be able to help a lot of people secure a better financial future in the days and years to come.
Thanks, Bonnie, for your help. And the other thing I just want to add before we close off the call is this is not just restricted to California. So if you have loved ones that are outside the state, we have companies that are all over the country, so they can be protected as well. And just think about those people that you want to protect that don't have this type of insurance that are in your close circle.
Very good. Well, thank you so much, and we thank you for taking the time.
Thanks very much. Okay. Bye-bye.
Bye-bye.